Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets, the weekend edition for Sunday, the 27th of March. Starting off with AfriTin, where you can see that the shares are nudging that resistance line there from the beginning of last year. We've had peaks near to 8 pence, and that's been our initial target once we broke that line of resistance around 5 pence back in December. Big picture here is that above 8 pence, we're looking for the top of that rising trend channel from 2020, currently pointing as high as 13 pence, and that could be seen maybe 1 to 2 months after any weekly close above 8 pence. So looking pretty strong there. Also got a rising 50-day line support coming in well above that over recent weeks, which is a plus, and at this stage only well below 6.5 pence, really delaying the upside scenario with an uptrend line there in the RSI window from way back in June last year. So looking strong on all technicals at the moment. Moving along to, well, there's plenty of A's in this selection this weekend. First up is, after AfriTin rather, is Arrow Exploration. And here you can see that we've still got this broadening triangle that's been in place since the end of December. At top of the triangle there, heading towards now 22 pence, maybe as soon as the end of May. All we're waiting for now really is sustained end-of-day close or a weekly close above 14 pence, which was the initial March resistance for the shares, and I suppose also resistance back in February. So shouldn't be long to wait there. Again, like AfriTin, we've had support points well above the 50-day moving average, which is rising, as is the 200-day. And that suggests that there's decent momentum behind the current price action. Onto a stock which doesn't really have much to go on, but looks like it's already becoming a bit of a punter's favourite, despite rather widespread. Here we've got Alchemy Investments. The main break here, the main positive break, was the break of that resistance line there from back in November, around 95 pence earlier in the week, and we've shot up since then. Got a rising 50-day moving average, which is also a positive, and bullish divergence started the whole thing off earlier in the month. So initial target here, as I said before, up towards 150. Break of 150, and we could be looking at the top of the broadening triangle from November as high as £2.15, £2.20 as soon as the end of next month. Good to see Angus Energy finally showing its technical bullish credentials. So the fundamentals are there with the gas explosion, and explosion of the gas prices rather. But here we managed to sustain or have a sustained move above the top of that February gap down that we had at 0.95. That's what we were looking for, and we've got a weekly close above that. So it all looks set fair now for a move towards the top of a broadening triangle from back at the beginning of last year. That's pointing to as high as 2.2 pence maybe over the next 1 to 2 months. But we hope that the shares will start to accelerate now, having had that consolidation over the last couple of months, and also that final bear trap and rug pull that we had at the beginning of February, just to make sure that weak hands were likely to be out. On to Aminex, which gets periodic coverage here. Here we've got a very good looking consolidation here, sort of V-shaped bull flag. Again, above the 50-day moving average on all the dips, which is very positive. And the view is that now we should head towards a rising, well, a resistance line projection from this time last year, currently heading towards 2 pence, and that could be seen by the end of May at the current rate of progress. Nice uptrend line in the RSI window as well. But again, here the key that the share is very keen to find support above the 50-day moving average, currently at 0.9 pence. The longer we stay above that, the greater the chance of that 2 pence target by the end of May. A stock which seems to have its fans, sort of FDA, sort of licking their lips about the FDA. Here we'll get Angle in a minute when I press the right buttons. Angle closing the week above its 50-day moving average. That's currently at 97, so the longer we stay above that, the greater the chance of a move towards the 200-day moving average, currently at £1.15. But nice recovery here. Neckline resistance at 90 pence, and that was broken last week, and that should now be enough to get the shares up towards the 200-day moving average area, which should also put it back, the shares back in the range that we had before, between around £1 and £1.40. On to Blue Star Capital, which has been a bit of a slow one, or was a slow one until we had the decent move last week. Here you can see that we've got a situation where the shares have had a one-touch rebound off the rising 200-day moving average, which is a known phenomenon, as well as being a bear trap from below the initial March support at 0.24. We're now up against that resistance line there from January, around 0.4 pence. So an end-of-day close above 0.4 is all we need now to hopefully open up the idea that the shares could hit that October resistance line projection as high as a penny over the next couple of months or so. In the near term, ideally the shares would remain above the 50-day moving average at 0.35, but good bullish divergence there in the RSI window as well, over and above that one-touch rebound off the 200-day line. A stock which I'm not familiar with, which is very unusual. Maybe it's one that's changed its name from some other manifestation, but Cordell, we've got a straightforward bear trap from below the February support at 8 pence. The longer we stay above that, the greater the chance of a move towards the top of that November resistance line projection, currently pointing as high as 15 pence. Again, a target for maybe the end of May, or by the end of May. Good bullish divergence there. So the lower March lows, but higher RSI trace flagged the move higher for Cordell over the near term. I looked at Galantis earlier in the week, but too good to ignore now, with the second gap to the upside above the initial 2022 resistance at 35 pence. So above 35, we're looking for a new leg to the upside, perhaps up towards 50 pence at the top of the rising trend channel from the early part of last year. But the gap there, certainly an exciting technical and charting development. Lots of people getting excited about Hurricane over the weekend. I think there was a late announcement on Friday. And here we see the shares in a rising trend channel from December. Top of the channel there at 16. So the longer we remain above recent resistance at 10 pence, the greater the chance of 16 pence. Probably as an initial target over the next month or so. So looking pretty strong there at Hurricane. Minoan, not one for the impatient, I would say, over recent months and years, but here we've broken a line of resistance from December. We've got bullish divergence as well, or uptrend line in the RSI window, so that does suggest we're going to have some reasonable momentum here, and the longer we stay above the 1 pence area, the greater the chance of a move towards that April resistance line projection at 2 pence. Perhaps over the next 1 to 2 months, but probably presumably 2 months more likely than 1 month, but you never know in these situations. Just a couple of stocks to go now. First one is one which one looks at with trepidation because it's COVID related. MyHealthChecked, here we've got a line of resistance from at 2.25 pence from back in March, and an end of day or a weekly close above that, and maybe even that you could allow up to the 200-day moving average at 2.5 pence, would then open up the possibility, which seems rather optimistic, but open up the possibility of a move towards that September resistance line projection at 5 pence. This stage only back below 1.6 pence, and the 50-day moving average really delaying the upside scenario for the shares. Finishing off with a slightly different type of stock, Petro Diamonds. Here we've got an ongoing break to the upside. We had a golden cross for the shares back in February, which was versus the 90 pence level. So that was pretty decent. Final flush out there after the golden cross down to the 81, 82 pence level. So that also gives a credibility that this stock is going up rather than down. And the longer we remain above the initial March resistance at 118, the greater the chance of a move towards 180, which is a long-standing resistance line projection from back in September 2020. So let's see how we go there. That's it from me today. More updates during the week.